All right, everyone. Welcome to the week ahead macro event analysis at the Forgotten Money YouTube channel. We will first go through the last week, what we had as a macro event, what data we got from the each central, let's say central from the central banks or from the countries, and we will also talk about how these events have impacted that particular currency, or if we can say like a particular assets. And after analyzing last week and what impact it had on the on any particular asset, then we will move forward to the week ahead macro event analysis. And truly I'm very excited about the next week because we are having a plenty of economic events leaning ahead before the start of today's macro event analysis session. So let's quickly have a look what we had on last week, starting from Sunday. I think I have already talked about the French parliamentary elections on my last macro event YouTube analysis video, and I don't see a reason going through again from what we had in the results of French parliamentary elections. So moving to the Monday, because we don't have anything particular on Sunday, as all of the banks close and it's a holiday. Talking about Monday, we haven't had much as a macro event. There were some events, but these are the very focused events, as you can see here. If we look at it says low impact expected. So if you see the yellow indicator, it means that it has a low impact. If you see a red, it has a high impact, and if you see some sort of a orange, it has a medium impact on any particular asset or currency. So moving forward with that, Monday we haven't had a very important impact news on the board. But Tuesday, if we look at the USD side, we had a Fed chair Powell testifies, and we also had the Treasury Secretary Yellen, she spoke. And we also had a Chinese CPI, PPI, and New Zealand official cash rate, and the statement alongside they released. So starting from USD, we had as I said, Fed chair Powell, and he was pretty much neutral, or let's say inclined to the dovish side, as I have here his comments made on his testimony. And he had two-day testimony on July 9th and July 10th, and the both day he pretty much stayed neutral or dovish by stating that I do have confidence in inflation coming down, but I am not prepared to say I'm sufficiently confident in it coming, that inflation is gonna be 2% at the end of this year. However, it was a pretty much neutral comment, but it was still considered a dovish comment from the market, and the market tried to buy the equities and try to sell the dollar behind this comment. So moving forward with that, we had a Chinese CPI and PPI report coming out of the event, and we had pretty much close, but showing a descent in the inflation by year of year, setting 0.3%. It was recorded at the last event, and the market consensus was a bit higher by 0.1%, but it just went against the market expectations and showed a really downside momentum by 0.2%. The figures came out. PPI year of year also in the water, but it exactly met the consensus of the market, negative 0.8%. Now, here is the official cash rate we had from the New Zealand. And if we look at the statement they made and also the official cash rate they kept, as you can see on the screen, it stayed 5.5%, and which was exactly in line with the market expectations. And we also had the previous staying at 5.5%. And it's been quite a while that kept its interest rate at 5.5%. If we look at the May 2023, it's almost more than a year, right? Like we are in a July, and they kept this interest rate at 5.5% from May, and and the market is currently pricing in very little for this bank to reduce the interest rate before the end of this year. I think, if I'm not wrong, there was like around about 28 basis points. Well, I will look forward. I will look into it later. So let's have a look at what we had. RBNZ leaves its cash rate on hold, as we know, at 5.5% as expected, and as we know that a reserve RBNZ meeting is a policy review. They did not release a full monetary policy statement, and so there are no fresh economic forecasts or briefing being issued. So I have a article here in my hand. I downloaded it from the Forex Factory. Not the Forex Factory, Forex Live, and the article has been read by Amanon Sheridan, and he highlighted some of the key points from the statement the bank has released, and one of the was the committee expecting headline inflation to return to within the 1 to 3% target range in the second half of this year. What does that mean? That means that they are now expecting that inflation can return to their target level in the second half of the year, when we are already in the second half of the year by so far now. So, and they stated that about their cash rate, the committee agreed that monetary policy will need to remain restrictive. The extent of this restraint will be tempered over time, consistent with the expected decline in inflation pressures. So the easy version of this would be, if inflation goes down and they are willing to cut their rates, and or I say rates can go down. So it was pretty much a little bit dovish statement we saw from a Kiwi side. As compared, we had a last statement from RBNZs, and they were pretty much very hawkish, and they also increased their projections if we look at the CPI reports, if we look at the OCR, higher for longer interest rates. However, at this meeting they kept their interest rate at 5.5%, but also with that, they, in their statement, they pretty much went dovish, a little dovish, and that was the point when I think, if I'm not wrong, Kiwi sold out across the major across their peers, and it was a pretty nice move we saw after this RBNZ season. Now, moving forward on Wednesday, we also, as I said, had a second time testimony. Fed Powell came, and it was pretty much the same as we had on Tuesday. So there wasn't anything special he talked about. So on Wednesday, we also had a Bank of England. Some of their members came out and talked to the press, and in the press they really went hawkish, and Bank of England Pill said services price inflation and wage growth continue to point to an uncomfortable strength in underlying inflation dynamics. That was the first comment he made. And the second comment was, it is when rather than if bank rate cuts still seems appropriate. So that was pretty much a hawkish statement by Made, Bank of England Pill, and we also had Bank of England Man and Haskell spoke on that day, and they both were pretty much hawkish. But however, I don't have the comments on my table right now, but I do remember that it really tanked the pound, and we saw pretty chunky moves up to the upside after these comments. And just after that, moving to the Thursday, we had a GDP month on month from Great Britain, and it just came better than expected. What the market has expected, it was 0.2 what market was expecting. So it was a really nice move to the upside after the hawkish comments from Bank of England. The pound also got another reason to go higher. Now let's talk about the inflation reports we had from the dollar side. And if I quickly remind you, just a couple of minutes ago I said that we had Powell spoke, and he really said that the inflation is heading toward the right path, and he's not saying that he's pretty much confident that inflation is gonna head back to 2% within this year. However, so with that, if we look at the inflation report we had, we clearly saw a big chunk of miss across the board. CPI year of year, it just came to 3%. It was a pretty nice downward trend we saw on the last report, and it is at 3%. However, if we look at the July 2023 last year, it's just got stickier, I think. However, if we start looking from the April, it's just shown a nice downside momentum. So July 2024, we are sitting at a 3%, and we are not that far from the Fed inflation expectations, and the Fed want the inflation to be at 2%, and we're not that far from that. So if we look at the just month over month, it just came negative 0.1%, and it has been very rare that we have seen the inflation heading into the negative territory. So, and core month over month came in 0.1%, and it was a pretty nice data we had from the US side, and we saw some of the nice moves, and we also took some profit off the table after trading this event. Unemployment claims 222k came less than the market was anticipating, and which was stating that the labor market is pretty much staying strong. It's not that weak. And as just a quick reminder to you all that we had the bank. Okay, so FOMC stating that they are now pretty much start focusing on the labor more than they were focusing on inflation. They don't want the labor market to crash. So if they do saw that labor market is not showing a good sign, and they are like started to weakening, then they said they can react to that data and can reduce their rates, and that's what we are willing to see, that what happens next. But currently with the data, the labor market is pretty much strong, with the unemployment claims staying at 222k. We also had some comments from Bostic and Museum. However, I forgot to take some notes on that. Now, moving to the last day of the trading session, Friday, we had PPI reports, and we had a University of Michigan consumer sentiment reports, and just pretty common that CPI is pretty much follow the PPI reports, or let's just say PPI report follows the CPI reports as a producer. If if cost higher to manufacture, obviously the cost gonna get transferred to the consumer. However, we saw a totally opposite what happened here. Core PPI month on month came better than expected, with the revisions also showing better. PPI month on month 0.2%. Market was expecting 0.1%. So that was a pretty much opposite what we had on a CPI report. However, there is a thought that the components to Meyer PPI and the components to Meyer CPI are different. So that's why sometimes we get this sort of opposite releases, with the CPI showing downward momentum and the PPI showing a really nice upward trend. So, with that being said, University of Michigan is what we had on the last day of the trading. At 11 a.m. Atlantic Standard Time, we had University of Michigan consumer sentiment coming, which came better than 65.6 to 68.2, revised better to 66, and the expectations from the people that took the survey is that they think the inflation can stay close to 3% by the end of this year. So that was the last week data we had from each country, and now moving forward, talking about the starting week, starting from July 15th and ending at July 19th. As I said, I'm pretty much excited for this week because we are having a nice releases from, if we even though we look at the pound, we are having an inflation report, we are having the labor report. If you look at the euro, we are having the interest rate policy coming out, and I mean. As Canadian, we are having an inflation report. We are also having a Fed Chair Powell speaking on Monday. So these are the events that I'm really looking forward, and really thinking that I hope we get some sort of a volatility of these events, and can help to trade, and can make some buck out of it. Now let's start with Sunday. Sunday we are having a GDP from China, industrial production. So market is expecting a little bit downward. So GDP is expected to came 5.1%. So it is little bit downward from what we have seen from the previous. Market is expecting to came a little bit worse than the past, but keeping an eye on China is very important because it plays a really critical role in the manufacturing side, in the trade side, everything. China is very important, so just keep an eye on what we have. Even though it is not very impactful data, however, it is something to keep an eye on. So I will definitely try to keep an eye on. We are also having unemployment rate. The market expecting just to stick at 5%, but however, we look forward what we get. On Monday, we are having an Empire State Manufacturing Index. As I always said, I'm not really excited about trading this sort of manufacturing indexes, because every time it just came very much out of the deviation, and it is very rare that it comes in line, and there is not very convincing trades we can took out of this data. However, we will look forward what we get. If there's a pretty chunky move or chunky data came, like some sort of negative 80 close to that, even though worse than this one. For January 2024, we had negative 44.6. We get some sort of worse data than this, then I think I can think about trading this event. However, we will look for it, that what we get. Now, here's the most important event we're gonna have on Monday. It's 1 p.m. Atlantic Standard Time. We're going to have a Fed Chair Powell speaking. So we do know that the Powell on the last week in his testimony, he said that he is pretty much happy that inflation is heading back to 2% in a or let's just say is on a right path, right? But he also said that he's not that much confidence that the inflation will return to 2% by the end of this year. So as we had CPI report on Thursday, which came in really nice, and we will look forward to see what comments he made on this report. I mean, this is something really I wanna look that. Okay, so where is Jerome? Right here. So I really want to look what comments he made on that CPI report, as he says that he's really happy that the data came from the US on inflation side is really heading to the right directions, and if he made some sort of a dovish comments out of this report, then I will definitely try to trade this event. So this is something really important, so keep an eye on this. Okay, let me just have some water. Now moving forward, we are having a CPI report from Canada, and before talking about the inflation report, let's talk about what the Bank of Canada thinks the inflation will be at the fourth quarter of this year. They are expecting that the inflation will go down to 2.2% at the end of this year, at the quarter four. So we are here seeing that the common CPI year of year is not that far from their report, from their projections. It is at 2.4%, and we are in a quarter three, and we will see what we get from the CPI report. However, the last monetary policy, they lowered their interest rate by 4.75. Oh, not by 4.75%. I'm really sorry about that. They lowered the interest rate by 25 basis points. So it was at 5%. Now it's sitting at 4.75%. Now, with that being said, the bank went really dovish, and they stated that it is reasonable to expect more rate cuts as inflation continues to ease. So this report can give us a really nice bias on the currency. If we get a nice chunky data out of this event, let's say that CPI came 0.0, medium 2.64, anything below than the forecast, common CPI coming below than forecast 2.4, maybe at 2%. I mean, we can see a huge move after this event, because it is perfectly aligning with the thoughts the bank having, and with the comments or the statement they are making, that it is reasonable to expect more cuts if inflation continues to down. It gives another reason for the bank to say that they are willing to cut more before the end of this year. And we also had some comments after this meeting. Bank of Canada Governor Macklem said the monetary policy has no longer needs to be restrictive, and we still need to get inflation down further to target levels. So this inflation report is something I'm really gonna look forward to. So this is something to keep an eye on. And now moving forward to US core retail sales we are having. So this is something not has the impact it used to have. So it's just like no trade event, I guess, if I'm not wrong, or if I can say so. So the core retail sales came, expectations from the market is to come better than what we had at the prior zero negative 0.1%. And at the retail sales month of month, the expectation is to come 0.1%, not the 0.1%, negative 0.2%. So we will look for it, what we did, what sort of data we get from this event. Now, talking about the CPI quarter of quarter, let me remind you that what we had from the RBNZ cash rate, and I think I already explained it to you all. uh, I already explained it to you all in the last week. As I said, we had cash rate coming 5.5%. So the bank went really not that dovish, but they aligned to the dovish side. And if we look at the projection side from the bank expecting the CPI inflation quarterly in June market. The bank expected 0.6%. So this is what the bank has expected, and this is what we got, perfectly aligning with the bank. 0.6%. However, now the market is expecting that the CPI quarterly report, the CPI report may get to 0.5%. So this is something that the that the market is saying that, hey, we think that the projections you gave it to us, stating that in June the inflation will stay to 0.6% quarter. We think that it will go down, and this is something we are paying attention to, because this will some sort of give us a bias on the currency, that where the inflation is heading to. All right, so with that being said, talking about the CPI inflation report from Great Britain pound. Just also reminding you here, if we look at the Bank of England point of view, and what the comments we had from Bank of England, Pale Haskell, man, they are really paying attention to the inflation and to the labor data, and they clearly stated that the Bank of England pill, that the services price inflation and wage growth continue to point to an unforgettable strength in underlying inflation dynamics. So this inflation report can give us a nice move, because we have seen a pretty much nice strength in pound from in this last week. And if we see continued descent in the inflation, then I think we can see a nice mean reason in the pound strength, because it is already at the 2%, and the bank has done a pretty much nice job getting the inflation at 2%. Is pretty much seems to stay at under control. But however, we will look forward what we get from this data. Market is expecting a little bit downward, 1.9%. However, if we do get a better than expected data, this is something that can give a pound another reason to hike. So we will look forward what we get from this. Rather than that, we are having building permits from US, not something that worth trading. Industrial production, nope. So it is just saying that it is really important to know when we are having speakers from any particular country. or from any particular central bank. Like from FOMC, we get most of the speakers from United States. We get most of the speakers from European central banks, and we get very less comments from Bank of Canada and from Japan, from New Zealand, Australia. We get really less comments from those central banks, but the majority of the comments we get from the ECB, FOMC, Bank of England. These are the three banks really plays a critical role by sending most of its participants to the press and giving their views, what they are thinking about their monetary policy. Now, if we trade oil, crude oil inventories is something you want to keep an eye on. Now, looking at Australia, we are having a labor data from Australia, and let me just get the statement. I think I just had that in my hand. Anyway, I can't find it. So let's just say the Bank of Reserve Bank of Australia, they okay, no, it's not working on. Need to find RBA decision. It was somewhere here. I don't know where I lost it. All right, here I found it. So on the last RBA decision, they left their cash rate at 4.3%, and it was pretty much neutral, or I say hawkish, because we had comments from Bullock stating that we need a lot to go our way to bring inflation back to range, and this was something really hawkish they stated. And also in their projections, they expected by the end of this year 2024 the unemployment rate at 4.2%, and they're expecting the unemployment rate will go down. No, this is not, will rise. Okay, so my bad, guys, having so much going on here. So now unemployment rate, the Bank of Reserve Bank of Australia in their projection stating that the inflation, the December, by the end of this year 4.2 is what they're thinking, and they are not really far from that. We are almost at the start of this quarter 3, and if we get 4.1% from this, then it's just 0.1% unemployment rate from their target level. So we will look what we get from this data. Employment change is shown stating that forecast that it can come a little bit down from what the prior had, but we will look at this this event, what we can get from this. So after that, we are having a labor data from pound side, from sterling side, and it's something really important. Unemployment rate expected to stay as it is, 4.4%. Average earning index 5.7%, and thinking that the wage growth will show some easing, and also easing at the hiring. 23.4k is what market is expecting. So the expectation is that we will get a weaker labor than stronger, but we will get our bias on when we get the labor data out of this event. Now, moving to the ECB. So ECB has reduced its cash rate on its last meeting, and But with that, they do decrease their cash rate or monetary policy trust rate. However, they increased their projection levels. So they went hawkish with their projections by stating that the inflation can go 2.5%. It was higher than the previously they forecasted from 2.3%. And also, if we look at the GDP, they said that they expected that the Eurozone will grow by 0.9% by the end of 2024, and they kept their forecast flat at 2.25 year for a GDP perspective at 1.4, and they increased their projection for 2026 by 1.6% as a GDP perspective, and also they increased their projection on inflation. So what does that mean? They do decrease the interest rate, but however they went hawkish on their statement and hawkish on their projections. So with that, looking at this current monetary policy statement we're gonna get from ECB, expectations from this is that they're gonna stand pat on rates, with market currently assigning for like 92% chance of such an outcome. All right, and since the June meeting, the headline inflation ticked lower to 2.5%, and also we don't have yet the quarter 2 GDP, and it's not gonna be available till July 30th. However, we had some PMI reports coming out from Eurozone stating that manufacturing has fallen, services has fallen, and the composite stating that it is sitting at 50.9 versus previous we had 52.2. So unemployment rate is currently sitting at 6.4%. And on the last meeting, the President Lagarde said that officials are in no hurry to cut rates again after June's move, and the central bank requires additional reassurance that inflation is headed back toward 2% before it cuts rates further. So, market is currently assigns a roughly 80% chance of a cut, with the total of 46 basis point of easing seen by year end. And this policy decision we're gonna get on this Thursday seems to be a non-event, with the policymakers gonna sit on their hands and see how data plays out. This is something we're gonna see. It can be a non-event because as I said, also in the news squawk we had, they stated that the participants thinking that it's gonna be a non-event to trade, but however we look forward because we don't know. So after that, we're gonna have labor data, unemployment claims, something to keep an eye on. We also are gonna have ECB press conference after the interest rate release. After that, we have some FOMC members, and we will get some more. As I just a quick reminder that these calendars gets updated, so make sure you go to these calendars every day before you start off your trading sessions. Now, with that said, at the last day of the next week, we are having a retail sales month on month. This is something it says that can have impact, and we also are gonna have core retail and retail sales from Canadian credit economy. So this is something we're gonna get at the end of the trading day on Friday. But as I said, the major events gonna be until Thursday with the ECB and some labor data from US side. However, I'm not very keen to trade these retail sales because it doesn't give us a nice edge or nice bias on a currency where it is heading to. With that saying, with that said, we are, I guess, have reached at the end of this video. And if you have made this far, thank you so much. And please don't forget to leave your comments if you think that this week ahead, or let's just say previous week analysis and a week ahead analysis help you to make some sort of a decision on your trading. And if you have any questions, you can always comment in the comment section, and I will try my best to answer those comments as in a timely manner. So see you guys next week. And also I'm currently trying to start central bank policy decision analysis, and also some trade ideas we can have out of these events or before having this event. So I'm trying to gather around some more information to make those videos. However, I don't have particular date in my mind, but as soon as I start doing that, probably it will continue at its own pace. So thank you very much, and hope you have a great weekend. Thank you very much. See you next week.